Following a movie star.
Yeah. Ooh.
Obviously, now it's time to talk about enterprise software. So that
now it's going to get hot.
Yeah, it's definitely the act to be following.
Totally. Nobody's leaving, so we'll be fine.
Okay, good. Now stay in, please. We're going to talk about SaaS multiples.
It's going to be awesome.
Valuations, people, valuations. I was actually thinking this would be fine because we'll talk about IPOs in 2019. It's going to be this great year for IPOs, and it'll be really exciting. We'll talk Uber and Lyft and how great they're all doing, and everything will be awesome. And that just didn't quite happen. What happened this year?
Why are you looking at me? I would say, actually, I would say there's sort of a tale of two stories on the IPO side. You have, I think, companies that were previously valued on a pure revenue multiple in the private market that ultimately didn't translate into revenue multiples in the public market. And then you've got companies like PagerDuty, Zoom, Slack, and others where actually you're seeing pretty durable business models that translate very well into the public market as software businesses. And I think you'd have two very different type of IPO stories and public market stories from that standpoint.
Sure, their stock price didn't quite rise over the last year.
For what? Yes. Well, I think that
all of them basically.
Yeah, I think and Jen, as the most recent IPO, should probably talk about this. But I think we have too much of a fixation on sort of the IPO moment, and versus just building durable business models and how do they end up translating into valuations. Like the valuation that you get at an IPO is due to a variety of factors. What did the bankers price things at? What this is why direct listings is obviously a pretty big topic. So I would more look at it as sustainable trends on sort of how are these businesses being valued, and how are they performing.
I think it's really important to think of the IPO as the beginning, not the end. We all live in Silicon Valley. It can be a little bit of an echo chamber, and you talk about exits all the time. The IPO is an entrance, right? It is part of the beginning of a long journey for a durable company that you want to build a legacy around. And so it is a moment. It's the start of you really sharing a narrative backed by financial data to help people understand your current business, the potential for your business, the market that you're in, et cetera. And I think we tend to talk about it like it's the be all end all. And I think it's really important to think about like why enter the public markets? What are your motivations and your reasons for going public? And in our case, a big part of the reason we went public was to extend our brand platform. PagerDuty is a technical company. It's a platform for real-time, unplanned work that's well understood by the developer and DevOps community, but less well understood by your traditional generalist financial investors or even retail investors. And so for us, it was about getting the story of PagerDuty to every enterprise, every business, every modern worker on the planet, and helping them understand how we could change the way they work, how we could help them improve the fact that most of the work that happens to you during a day now is unplanned, it's spontaneous. Something breaks down because of all the complex technology sitting behind it, and yet you've got a consumer that will give you 1 minute to get it right. And being able to sort of take a very technical product and distill that narrative down into something that the financial community could understand was a really important part of our journey. But it also was a story that was actually easier to tell with the numbers. When we were private and we weren't sharing that information, people would say like, oh, little old PagerDuty, oh, what does that little company do? And so when we actually came out and shared our business model, which to Aaron's point, an enterprise SaaS business model is very different than a consumer app business model. And we shouldn't try and compare the gross margins between the two because it's a very just entirely different business model to work from.
But the PagerDuty story has gotten a lot more complicated over the years too, from being this notification platform to being this really complex real-time operating system for the
yeah, I mean, I'd like to think
infrastructure.
the technology is complex. The story is actually simple. So we've moved from being a single product that used machine signals from software environments to detect and understand issues that were taking place instead of waiting for a person to feel the pain and raise a ticket or call customer support. So you've really consolidated that detection and identification period. We then have built on top of that platform of intelligently routing the most important insights to the right people in an organization, so you don't have this situation where customers can't use your products or service, can't download their playlist, or can't order their coffee, and yet it's going to take IT 4 hours just to even figure out who they should have on the call. And so that's what we mean by the orchestration of real-time work. And yes, there's a lot of complexity that sits behind that in terms of managing distributed architectures and data coming at you from thousands, hundreds of thousands of resources. People are in distributed teams and don't know who's who in an organization or who has what expertise. But at the end of the day, what you're trying to do is close the gap between the customer experience, the perfect customer experience you want to deliver, and the technology outcomes that you need to make it happen every time, all the time.
Let's talk about getting to that point, though, where you actually get to tell that story on a roadshow, for example, right? You came in, about 3 years before the IPO as the CEO. What did you have to do to get the company ready to get to that point?
Well, it's funny because we talk a lot about getting the narrative ready and the roadshow, but getting a company ready for the public markets is all about really understanding your business, understanding the predictability of your business, where the strengths are, where the weaknesses are. And I think we spend a lot of time as executives with our boards, as private companies, thinking about like, okay, do I have 606 down? Am I SOC 2 compliant? Will I get through the audit? Do I have 2 years of audit financials? But what we really should be talking about is, do I have the right leadership team for the next 3 to 5 years? Have I really thought through how the competitive landscape is going to evolve? Do I have the right people in the right places? What does my strategic workforce plan look like? Have I prioritized the right opportunities? Because I can't do everything, and experimentation in the public market can be a little challenging. And so getting ready is about, it's about the leadership, is about team readiness, it's about, do you really understand and can you see the leading indicators in your business, et cetera. And none of those things are easy. And yet what we tend to talk about is the story, right? And so I think you have to do all those things. There's the inside the company work that you're doing to test whether or not you're ready. And I said to our company all the way through up to the day we launched, we can pull the pin on this at any point in time if we don't feel like we're ready. And I think we shouldn't bemoan people who make that decision, because it's probably ultimately the best decision for the business. And I don't think there should be a ton of shame in going, hey, I've taken another look, new information's available to me, now we're not going to do this, we're going to stay private, we're going to do the things that we need to do.
Well, we got somebody here who spent a little bit of time thinking about that.
I am that case study. So we did pull the pin in it initially. So we did a filing, and it turned out that our view of our losses was different than the rest of the market's view of our losses. And anytime you have that asymmetry, where your cash burn is maybe more impactful than you thought to what investors were thinking, that becomes a challenge. And then we got really hit by a public market correction where SaaS multiples dropped by like 30% overnight. So
Don't
really,
know what you're talking about.
yeah. So not a good time to issue a new filing. So we actually paused and we said, you know what, we're going to go get the business into a much better state, show a way better financial picture, and drive way more on the cash flow front. But it can be totally challenging inside the organization. We ended up pausing our filing and stayed effectively then private another 10 months longer than we had expected, so we could get the business model in order. And to Jen's point, I think the right time to go public is when you have the predictability, the operational rigor, the team to be able to go and drive a public business. I think what we've seen in some recent case studies or examples where on the masked by the private market story, companies were not operating with the level of maybe rigor or efficiency or economics that the public market would be able to go and value and make sense of, and we're seeing how that plays out. So I think the lesson for any entrepreneur or founder is the numbers are not going to lie, and you have to make sure that the business model, the fundamentals of the business model are as strong as possible. And I think this is why everybody, I'm sure, has read, retweeted, or written about the Fred Wilson piece this weekend. Yep. Bill Gurley has written a lot on this subject. Ben Thompson around sort of what is a software company and what is not a software company. And I think that it's probably less interesting to decide what is a software company and more interesting to think about what is a software business model. Mm-hmm. And to Jen's point, what are the gross margins of that business model? And the only reason why you care about gross margin is because that eventually translates into operating margin and cash flow. And so what is the durability and leverage in these businesses, and how should we be valuing them, and do you think about them? And I think that we've sort of broadly said, as every company is going to be a tech company, then every company should be valued like a tech company, but that's not actually accurate. Every company might be a tech-enabled company, but the valuations that you ascribe to them might end up being different depending on the underlying business model. And both companies could be fantastic, but you have to run them differently, and you have to think about operating them in a very different way.
Where would you draw that line between the tech company and there's the company that uses tech?
I think we probably spend too much time thinking about drawing the line and the semantics of it. I think it ultimately, if you can use technology as an enabler for your customer experience and for stickiness and for differentiation in the product experience, then frankly, you're a tech-enabled company. But after that, we should probably move on from the idea that that means something about your company that is different, and then just focus on literally then what are the fundamentals of the business model. Do you have a subscription revenue stream? Is that subscription revenue stream one that is of a high gross margin? What is the stickiness of the customer base? You know, what are your retention rates? Do you actually have a moat that software is actually applying and to and increasing? And these are the things that really start to define whether your business model is a little bit more on the software continuum or more in sort of the maybe traditional business continuum. Both can be fantastic businesses, but you run it differently, it gets valued differently, the cash flows are generated in different ways, and it's more that you just have to know which type of business you're in and run it in the appropriate manner. I think WeWork is a great example of sort of thinking that the tech would mask the underlying economics of the business model, and it doesn't. Tech is for a customer experience. It doesn't change your business model.
Yeah, I think there's a sensibility. I get asked a lot by CEOs that are thinking about getting ready to go public. You know, what was your playbook? How did you do this? And I think instead of thinking about what's the playbook, you need to be intellectually honest about what does your business look like, and what are the key leading indicators of your business that you want the market to understand, and how do you describe your business so that the market has, I think, an objective understanding of what the upside and the risk is. And I think that's one of the challenges of the IPO roadshow is you're selling, and at the same time you're setting expectations, right? And you want to make sure that the market understands where you think the business can go and gets excited about it, but that they don't over-rotate in their expectations, because dealing with really high expectations creates a lot of downstream difficulty. And I think we saw that. You know, this year, from an IPO standpoint, is a year of two halves. In the first half of the year, we saw really heady numbers and really high expectations. The back half of the year has been very different, and I think a lot of that's been driven by externalities, the political environment, the China tariff wars, the challenges every day that have created volatility in the market as we think about what does it mean to be in the longest, bull run in the history of mankind. Right, and so that's the other thing I would say to executives that are thinking about this. You have to be mentally ready for the externalities that you cannot control, and that people will expect you to be able to explain them.
Well, you just dealt with that last week, I think. You had news on Monday, I remember writing about it, and your stock went down 9% that same day. And
totally, and I think the only way you can sort of survive in an environment like this is you play the long game. Like, I'm gonna be here in 5 years, in 10 years. I'm building a business that I think is going to change the way people work alongside of Aaron's business and Slack and others. And I think the way I think about it is I know for myself, and I try and explain this to my employees, that we could be having the best day at work and the worst day on the stock market. And likewise, we could be having the worst day at work and get a huge uptick in the stock market. The two things are not correlative, particularly in a real-time basis, and the bots are running the markets, so there's not a ton of human empathy floating around in it either. And so you have to try and focus on the business, stay focused on the long game, but make sure that you're managing the rigor and the operations of the near-term business.
Yeah, and I think and this is in Fred's piece this weekend, but I think the thing that it's all theoretical until you go public, but as a private company, you more or less control to a high degree your valuation, because you get to choose when you take funding and thus what your valuation terms are at, and you could choose not to take funding and thus not change your valuation.
And you get to choose who values you.
Yeah, exactly. And then what
you
are they?
The best one.
Right. And so it's a very company-friendly market in terms of the narrative and being able to ensure that you have the right story for employees and whatnot. And again, we have many private companies that have perfected the art of driving that. The moment you're a public company, within 30 seconds of pressing the button that launches the market, which, by the way, doesn't actually launch the market. They have backup plans in case you press the button poorly.
Were you eager to press the button?
I was. I thought that I was launching the stock market that day, and then I was informed that even if I fell off the podium, they were still gonna launch the market. And so I felt like I had less control of the world economy than I had hoped for on our IPO day. But I would say that the moment you go public, within seconds, other people control your valuation at every single transaction, and so they're gonna be driving what your employees or what the market thinks of as your valuation, for a variety of factors that have nothing to do with maybe what you're doing internally, but in many cases, are driven by the things you're doing internally, and those do converge. The great thing about the public market, and I'm actually a really big fan of the public market, is reality and how you're valued do eventually, at maybe over weeks or months or quarters, converge. And at times there is a differential, and you're working to make sure that differential is as limited as possible.
Sure. And let's be clear, there are benefits of participating in the public markets. We're an enterprise software company. We serve more than half of the Fortune 100 and a third of the Fortune 1000 or Fortune 500. Sorry, I always get those numbers wrong. And I think it's important for our large customers to understand that we're a viable business that's going to be around for a long time, that's compliant, et cetera. And so going through the IPO process is a part of demonstrating your mettle, and that you can be a long-term partner with those customers. So I think that's important. The IPO process can be fun too. I mean, it's quite a rallying cry.
Did you have fun?
So we did have fun. I mean, I have a high level of intellectual curiosity, so I like breaking things down and figuring them out and then building them up, et cetera. But for us, the real challenge was telling a very technical story to a very non-technical audience and still being able to refine the value proposition and help people understand it. And the financial analysts and investors, they're pattern matchers, right? They're like, are you the Uber for this or the Box for that or the this for that? And we would have to say like, no. And so I think the challenge is when you're creating a category, there's that much more onus on you to really help them understand what are the problems you're solving, who are the people you're solving those problems for, how big is that market, and why are you uniquely positioned to serve that market? And I think we're still on a journey of learning. I think the financial community and the industry still underestimates the opportunity for SaaS and how early these markets are. Like the market that PagerDuty is in, digital operations management, real-time work, it's a very nascent market. There's a long runway there, but no one ever heard of it, so it's unfamiliar. So you have to actually convince people of the market, the category, your product, your leadership, and if you like a challenge, then that's fun. If you want it handed to you on a plate, probably not so much.
You agree with that it's still very early?
Yeah, I mean,
the markets are much bigger than
the thing that I get really excited about, and when you look at companies like PagerDuty or Zoom or Slack or whatnot, is I think a lot of times we have thought about disruption as, okay, I'm taking a current market, making it more efficient, faster, cheaper, better in a way that the incumbent can't do. What we often underestimate is when you do those things, how much bigger is that market? Not 2x or 4x or 5x or 10x, sometimes even 100x. Yeah. And what's actually been holding back the market size is the inefficiency of the prior model. And so if you think about something like PagerDuty, where only a very small set of large enterprises in the world had their operations fully tuned, fully automated, with all the right alerts, all the right notification, all the right machine learning around what's going on. And it would be the companies that could afford millions and millions of dollars of enterprise software projects inside their data centers. And now you move to a world where any developer on the planet can use that exact same technology. We're not talking about a 10x change to that market size, but maybe 100 or 1,000x change in that market size. So I think we're insanely early, and when we look at just even the numbers of customers that all of us collectively work with, we're in the earliest of innings in terms of what the cloud is going to be able to do in terms of the businesses globally, the businesses of all sizes, more of the end user adoption that's going to still happen in these organizations. I think the business models that we're now seeing as this sort of next era of enterprise technology, where it's more bottoms up, more self-service, where your audience is measured in the tens or hundreds of millions of people as opposed to thousands or tens of thousands, it's going to completely continue to change the landscape.
Is that true for Box as well?
We hope so. So we've been doing this for 14 years. So in many sense, like we got our start in the very, very, very first wave of cloud, and we were able to ride the first wave of cloud and mobile. But when I look at our own data and when I look at the customer base, just as an example for us, we'll do a little over $690 million in revenue this year. and the total market, the total spend on technology that we think we can disrupt or replace is somewhere around kind of $40 to $50 billion. So we're actually still very, very small relative to the size of the market, and most of that market is going to be moving to the cloud over the coming 2, 3, 5 years. So even though, for me, and you know, I have the gray hair to prove it, like we've been doing this a long time, and we feel like we've made a lot of traction, we know that we're actually still in the very earliest stages. And when we go to businesses, again, globally, and the amount of analog business processes, on-premises systems, legacy ways of working that still exist in those organizazations that are going to all still move to the cloud, I mean, we're in like the single-digit percentage points of the journey at our stage.
Do you think that's true for you?
Can you validate what I just said about my business?
Well done.
Okay, thank you.
I agree with everything
Are
you
you
just
so
said.
positive because there's like, you know, activist investors?
You know, you have to be super optimistic to be in either of our jobs.
Completely.
Yeah.
I mean, because as a CEO, everybody tests your conviction all the time, whether it's your employees or your family or the investors, et cetera. And you know, there's this huge desire from the external community for something new every time you open your mouth, something fresh, something new, something bigger, something better. And you have to hammer away at the same fundamentals, because most adults can't learn something unless they hear it 3 to 7 times over and over again anyway. And so you're fighting this tension of remaining consistent, staying your course, getting people to adopt your narrative and align with your thinking, and yet they want something new and fresh and smart and fun, you know, et cetera. And if you're an optimist and the chief selling person, the chief storyteller, you also want to give the people what they want, and you can't always do that. It's treacherous to do that, I think, in a lot of ways.
Yeah, and I think the balance of all this is extreme optimism with a high degree of rigor and scrutinizing the business, because you have to make sure that the gap between your optimism and reality is as limited as possible and as narrow as possible. But you have to be optimistic in our jobs because of the markets that we're going after and what we have to go create. And to the activist point, for us, again, it comes with the territory of being a public company. We're going to have lots of different investors. Our investors are going to have lots of different sort of views on the business. We actually agree with most of the views that we hear about as sort of the views of driving more operating profit, driving more growth. And so I've found very few times ever where we've been misaligned with public investors. We might have different views of time frames around when they want to see certain results or execution, but in general, I think public investors have a pretty good understanding of at least our side of the business models on sort of cloud and SaaS. And in our case specifically, there's just different views around the speed at which we want to get to different profit levels. And again, in many cases, we do share those views.
Sure.
And I think it's important you build resilience as well, and you get your team ready for being resilient. You get your employees ready for being resilient and staying focused on what's out in front of them, as opposed to what people say this week or last week or the next week, because that can be very distracting, right? And we're in a really tight talent market. I find myself reminding our teams and our employees about how unique the opportunity is that we're in the you know, probably top 5 to 10% of SaaS companies of all time, that the chances of them finding a career opportunity similar somewhere else are, you know, less than the chance of being struck by lightning twice. And yet I ran the numbers, I ran the odds on that for the last town hall.
That's incredible.
Be careful walking
And I
out
think
there.
the challenge is also dying by slipping in the shower. That was another low odds opportunity. But I think that the challenge
Optimism,
is
people.
there's a shiny, optimistic new startup across the street on every block, right? And so you also have to be constantly reminding your team of the mission you're on, the fact that your values have not changed, that going public doesn't change that it's the start, not the end. And if you look back over time, particularly in SaaS and cloud companies, they have all created far more value post-IPO than they did pre-IPO. And yet our employees tend to think that the IPO is the exit. Like after the IPO, it's all done, I gotta go find another new hot, sexy startup. And I
But
think
you're
we should just
dealing
look
with
at the
that.
data.
You're dealing with those employees who want to leave afterwards.
So
right?
culture matters. You know, I mean, I care deeply about our culture. It is a priority for our entire leadership team and the board, having a diverse, inclusive community, giving back. I mean, we took the 1% pledge 2 years ago. We committed 1% of our equity, 1% of product, and 1% of employees' time to non-for-profit. That is going to fund when we come out of our lockup in the coming days, actually. It's going to fund, you know, nearly 20 million, maybe a little more than $20 million of opportunity for the community around us. And it's these kinds of things that fulfill the mission of the employees that you're working with and
Yeah,
give them purpose.
And I think the struggle that we all share, and many folks in this room, is when you're building a company that starts private, and again it's going well and it's growing, and maybe you don't have employees that have been through difficult periods because you're past that point. I mean, our first 3 or 4 years of the company were the hardest, grueling years of ever, and there were hundreds of times where we could have gone out of business. And so you have people that come in and maybe didn't experience that, and they only experienced the rocket ship in the private market. And then the reality sets that, okay, now we have to continue to run this business as a healthy public company. And so it's really important on that ride up that you get people in for the right reason. You get them for the culture. You get them for the mission, and the valuations and the sort of private market stories is, as hopefully you're able to abstract that away as much as possible from why people are joining the company, what the mission is that you're doing, and why people are going to be along for the ride.
And I think you got to be honest with them too. I mean, I always say to our team, there's no business class on the rocket ship. It's going to be uncomfortable. It's going to be bumpy. You might feel like you're going to throw up every now and then, but it's going to be fun. It's going to be interesting. You're going to learn a ton.
And based on your stats, you could say the alternative is slipping in the shower. So it's
there
like, which would you rather have?
Not good.
Great.
All right, nobody threw up on stage, so we're good. We're out of time. Thank you, guys.
Okay, thank you.
Thank you.